Have you been real estate market has been doing since interest rates have climbed and maybe we've seen home prices settle or even start to descend? Well, I like to tell people all the time that you may think that interest rates are affecting the market overall, but the home prices are just doing just fine and looking to actually extend from what I can tell what's been going on in the market by just daily looking into the MLS. Well, we actually have a full scale report to actually go over right now because the Hampton Roads Realtors Association has now come out with their listing report on home sales for the fourth quarter. And there are some details in this report that I really want to go through with you in the Hampton Roads market and kind of give you an idea if you are a seller or whether you're a buyer in this market or what you can really expect from what's going to be happening in the market going forward and some of the trend analysis that you can see that may be beneficial to you to know. If you just meet me for the first time, my name is Craig Houston. I'm a Hampton Roads realtor, and I'm here to give you the details in your Hampton Roads market update. So let's jump right into it. First off, I want to just go ahead and bring up what we're looking at currently as a snapshot here. And here are some of the key takeaways that we have in this report that I really want to just go over with you really quick and in detail as well. The Hampton Roads Realtors Association starts out talking about the economic conditions, where you see that the Virginia's job market slowed recently, according to them, where you see 2,200 fewer jobs in the month of November compared to October. Now, that overall job basis in the state is now about 4,500 jobs above the pre-pandemic level, which is an important indicator because here lets us know that the job market may be seeing a little bit of an unemployment rate increase, but it's still a strong job market in the Hampton Roads area. And with that, that let us know that there's still opportunities out here for people to still purchase homes. We'll get into that here in a minute. But the unemployment rate did inch up for the first time in nearly 2 years, which that took it from about 3% in Virginia to about 3.2 in the Hampton Roads regional area. Now, with that 3.2 in the Hampton Roads area, that's about a 3.1% tick that we saw before. So about a 0.1% uptick that we've seen in the area alone in this region. Now, when it comes to mortgage rates, we have seen mortgage rates start to stabilize and trend downward. They actually say that they've seen the average year or the average rate on the 30-year fixed mortgage rate was at about 6.15%, which is down completely from that 7% hike that we saw just a few months ago. That is a very good indicator here because when we talk about interest rates, that's the main determining factor for buyers in the market. And when buyer applications stop, that means that more inventory is actually sitting in the market longer for a longer period of time, which we're going to talk about that here a little bit more too, because we're going to go into details about what the monthly inventory is looking like for the fourth quarter and how that affects some of the areas around the region that people are more inclined to want to move into those areas. We're going to get into a lot more details on that. But what you see quickly out of this economic snapshot is that we got some things that show that the market is doing well, where we've seen positive job numbers above pre-pandemic levels. And then we've also seen where we're also trending towards the unemployment rate not being totally affecting and impacting the market, but also the interest rates are trending downward a bit. And this may give more opportunities for those to get into actually homes in the later parts of this year. So we're going to talk about a little bit more here, but you're going to look at the housing market conditions. They say almost 4,000 homes sold in the Hampton Roads area during the fourth quarter, which is about a 37% reduction, which means that's about 2,300 fewer sales that we saw in the market this quarter. Now, home prices continue to rise throughout the area. And that means they're giving you a number here at about 315,000 was the fourth quarter median sales price, which is about a climb of about 5% in the fourth quarter, which equates to about $15,000 overall. Now, also, what you'll see is that active listings is growing in the Hampton Roads footprint. We got about 2,800 active listings on the market for the end of the fourth quarter, which is about 69 more listings than a year ago, or is about a 3% increase. I wrote a note here. inventory still not growing substantially. Now, there's a reason why I wrote that note here for you, and I really want to break some of that down as we get into some of these other pages of the report. Is that basically what you're looking at is we're seeing new inventory come on the market, but what we've seen is that inventory that has been sitting out a little bit longer than typical days on the market has now starting to pull off the market as well too. And that means that, to me, what that tells me, that homes are being priced right. And now that we're over this shock and awe of interest rates continuing to trend up and home prices continually ticking up, and what those payments are looking like, I think people are now starting to understand the communication behind, oh, do I want to rent at these levels or do I want to purchase at these levels? It's pretty much equivalent. I know going into your savings a little bit more than what you typically would want is one of the things that a lot of people have struggles with, and they try to understand and wrap their brain around. But I do think that we're seeing a lot more communication, a lot more education in consumers understanding that renting is not most likely the best avenue for them if they have the savings and they have the income to sufficiently get into a home that they're not going to be overpaying for, and that there's going to be equity built into their income later on down the road by being in the right home. So we're going to talk a lot about more of this in detail. So let's continue on with our report and just keep on looking to what they have to talk about here. So they go over some of the key trends, dashboard stuff. But the main thing that I really want you to take away here in this report is that, like we said, months of supply in the Hampton Roads footprint in Q4 is up from a year ago to about 1.6. This is still below 5 months, which is still considered a seller's market at this point in time. Well, why do I say that this is still considered a seller's market when we're starting to see sellers concessions come on board, that we got buyers actually negotiating, getting negotiations actually considered by sellers in this market? Well, let's just take a look at the indicators that we use to kind of understand this trend. This is directly out of the MLS. What you're seeing right now that we have about total in January right about now is about a 2.8 month supply. Remember, at the end of this report in December 31st, they said that we had about 1.6 months of supply of inventory, okay? Now we're up to about 2.8 at the end of January. And what that means here is that what we're looking at is that inventory is still trending back up to this boundary. That boundary that we're looking at is about 5 if you look over here. So we need to get about to 5 months of supply for actually to even be considered somewhat into a buyer's market at that point in time. And really, you want to get above this trend wave that really lets you know that you're into a buyer's market at that point in time. And that will put us at about 7. So it's anywhere between 5 to 7 months of supply is when we know that we're fully entrenched in a buyer's market, and we're just not there yet. So we have time left to watch how this inventory develops out. And the way that inventory is starting to actually increase from the time that the report was made to where we're at in January, at the end of January, to where we're at now in February, we're starting to see this inventory pick up. So we may be trending to a lot more supply being actually on the market. But we'll talk about what I think about in the forecasting going forward as we go through this report a bit more. So let's continue on with our report and just look at some of the other numbers that actually sticks out to me in this report. Okay, so it says, in reference to jobs, that jobs is saying the strongest growth sector continue to be leisure and hospitality. There was about 28,400 additional leisure and hospitality jobs than November of the previous year in 2021. There was about 24,500 jobs more actually added in health and social assistance jobs compared to a year ago as well. Now, we did see some sectors lose jobs. We saw about 4,500 jobs lost in financial and insurance, 1,700 jobs in retail trade, and then about 200 jobs lost in real estate. So you got to pay attention to what's going on in those sectors. And here we go when we talked about the unemployment rate. Like I said, the state has actually seen an uptick to about 0.2%, up to 3% nationally, 3.2% statewide in unemployment. And then we've seen about a 0.1% uptick for just the Hampton Roads regional area of about 0.1. Okay, so as we look at in mortgage rates, We talk about those here a little bit. We're going to get to a lot more details about mortgage rates and what I think is going to happen here from a forecasting standpoint, but not anything definitive. But we'll talk about them here from an economic standpoint in a second. But looking at the housing market overview, as you see, they say as the market has cooled, it has also taken longer to sell homes on average. The slowdown has largely coincided with climbing interest rates, which we all are aware of. And even with fewer sales, home prices in the region continue to climb, evidence of how tight the supply in the market remains. Now, why I think that is important here as we talk about this statement of evidence of how tight the supply in the market remains. When we hear numbers like this that we're seeing where home prices are continue to increase, interest rates are downtrending at this point after the quick rise that we saw by the Fed to get the interest rates up in the marketplace. But what we're seeing is that if you have the affordability is still making people purchase or giving people opportunities to purchase better deals, or because of life events that's still making people have to move, relocate, downsize, upgrade, whatever the case may be from a home purchase opportunity and selling point. This is making the inventory that we're looking for actually tighter in these levels where prices are actually going higher. So you got to understand that the supply and demand is still a little bit out of whack, where people are still demanding inventory, but supply is sufficient enough to where people are still finding the right pairing of deals to make things happen in this market. Okay. So let's continue on here. Like we said, we already talked about and discussed that 2,300 sales happen in the fourth quarter. But then you go down here to this statement. The current fourth quarter sales totals are now a little above where they were 7 years ago in the fourth quarter of 2015, which shows you that a statewide total home sales was down 35% from the fourth quarter a year ago. Now, why do I think that that's important here to talk about is because when we talk about 2015, we're talking about levels that we have not seen in quite a ways. Okay. But what we've seen is that there was so much opportunity pulled forward due to the low interest rates that some people was buying more than one home, two homes, or three homes in certain cases. So not only was they getting a primary home, they was also getting their second and third homes for rental investment opportunities and things of this nature. Or they was offloading these transactions as well too. So we were seeing a lot of opportunities in the marketplace. We're not going to see opportunity like that again, probably for quite a ways or a while, maybe never ever again. But that's where a lot of these opportunities show up from. So let's continue on here and talk about a little bit more on what we saw from a local snapshot in certain areas. Like we saw 460 less sales in Chesapeake. Isle of White County shows a lot of new construction opportunities. They only had 27 fewer sales this year. Okay. And then you see in Norfolk, we had a decline in the city's housing market, but in the sharpest decline in over 8 years, where they declined almost 32% in home sales. Then you see home sales also obviously dropped in Portsmouth as well for the third consecutive quarter, which was about a 32% drop in the fourth quarter than compared to last year. Suffolk has cooled in the last two consecutive quarters in Suffolk as well, where you've seen a 40% drop. And this is the sharpest decline in quarterly sales in the city in over 8 years, just as in comparison to Norfolk and Virginia. Virginia experienced one of those sharp quarterly sales declines as well, about 43%, Virginia Beach. So when you see numbers like that, that lets us know that we were seeing a lot of people doing a lot of maneuvering during that time frame during the pandemic where these prices got a lot out of hand a bit here. So let's look at what's going on with home prices. Okay. Home sales across the Hampton Roads regional footprint are trending higher, despite the fact that fewer homes have sold this year. This dynamic is being driven by the tight inventory situation in the region. All local markets in the Hampton Road area had higher median prices to close out the year compared to a year ago. Now, this is the part that I thought was interesting. Okay, it says, rising home prices has deterred many potential buyers from entering the market. However, statewide, the fourth quarter median sale price was $362,000, climbing about 3.6%. Now in Hampton Roads, that price is at about $315 average median sales price, which is up 5% over the year. and up over about $15,000. Okay, so if you look at the last fourth quarters, we've seen a hike in home prices over 5% in sales. Okay, sales have been up increasingly in price 5% or more. We had that 12% rise in 2020, 7% rise in 2021, and then we had a 5% rise last Q4. So that is an interesting number here. And a lot of people think that this number is going to retract and it is going to go back down. But I believe in the spring, we're going to get another increasing push like this. And what we may see in next Q4, it may actually retract, but I think we're going to see a lot more action in Q3 and Q2 is upcoming, where it's going to be a lot of actually maneuvering around, where all this instability of a home transactions taking place is going to increase rapidly, I believe. So let's look at some of those actual home prices. So you see in the median sale price in Chesapeake is now about $360,000, which is up about $25,000 more. If you're looking in Norfolk to purchase a home, you're looking at about an $11,000 increase in the median sale price to about $276,000 average. If you're looking in Portsmouth, that's about a $21,000 price jump from last year, or a 10% increase. And talking about Portsmouth, I think there may be opportunity here. If you listen to one of my reels recently that I put out, Realtor.com actually lists Portsmouth, Virginia as the #1 marketplace in the CONUS, to where we may see more first-time home buyer movement in Portsmouth. And with this increase about 10% right now, those first-time home buyers are still going to be looking to move into those neighborhoods because they are some of the reasonable price neighborhoods in the 7 cities. With a lot of opportunities there for growth in that area. Now, if you're looking at Suffolk, you're looking at about $361,000, which is about a 15% increase. Well, $15,000 increase, I'm sorry. And then in Virginia Beach, you're looking at about a $14,000 gain, which is about the median average price being about $332,000. Okay, which is about another 4% uptick in Virginia Beach. Now, this is all about sold volume. But let's just get on over to days on market, okay? Let's talk about days on market, where you're looking at the second straight quarter that homes are staying on the market longer than the prior year. The first time that this has happened since 2015. That coincides with us having one of our worst quarters since 2015, okay? But our numbers are still higher than 2015 in sales, but now we're starting to see the days on market translate to what we saw in 2015 as well, too. That means that the statewide average homes on market is about 31 days and up from 27 days, 4 days more than they were this time last year. Okay. Now in Hampton Roads, it takes about 28 days on average, or about 2 days more to actually sell your home compared to the fourth quarter of last year. That's a small uptick. Does it make a bigger difference? Not really, but it does mean that your home may stay on the market a little bit longer. Now, if you're looking in Chesapeake, you'll see that it takes about 3 days longer. In Norfolk, it's about a day longer. And then in Portsmouth, it's actually about 1 day longer as well, to about 31 days. And then if you're looking in Suffolk, they had it in this report that it was actually 5 days faster, but that's incorrect. It's actually 5 days longer when you look at the scale. The scale shows you that it would take 26 days typically in Suffolk to actually sell a home in the fourth quarter of 2021. We're up to 5 days plus more, so that takes you to 31. Now, inventory is at 69 homes more listings than a year ago overall across the whole marketplace in the Hampton Roads regional area. Now, inventory levels have been building up recently in some local markets like Chesapeake and Suffolk, but while they're in contrast to that, there's fewer listings in such marketplaces like Portsmouth and Norfolk. So this is actually quite interesting. And then we see that there's about a 19% increase from a year ago, which is an additional 2,600 listings in the Commonwealth overall. Okay. So let's look at where these inventory levels are currently at in some of the marketplaces in Hampton Roads. In Chesapeake, that's about 83 homes more on average, which is about a 15% increase. If you're looking at Norfolk, there's about 49 fewer homes on the marketplace, which is about a 9% decline. And in Portsmouth, you got about the same thing with 281 active listings, which is about 48 fewer than the last year, which is a 14% decline. And in Suffolk, that is about a 54 more active listings than a year ago, which is about a 15% increase. And if you're talking about in Virginia Beach, where a lot more buyers want to be, there is 7 more listings compared to this time a year ago, which is about a 1% increase overall. Okay, so here's my takeaway from this report. Inventory levels, they're starting to tick up. But what we're also seeing is home prices are ticking up as well as interest rate continue to slide a bit back down to normalcy levels. What is normalcy levels? Well, if you really think about it, in 2019, we was already sitting around about 5% interest rates, and we're starting to trend back towards that level. We may taper off around about 5.5%, 5%. We don't really know. I know the Fed understands that interest rates impact hiking has actually started to impact the marketplace. And this may be a signal that they're getting ready to cool, but they're going to continue to hike and provide stability to the market so we don't get that overheating session that we had before. Now, I do think that we're going to have to see stronger guidance as we get into the spring, heading into the summer, because I believe that interest rates may get to a level where people and consumers may be like, oh, they're really not that bad, and could get back out there and start seeing those buyer applications increase a bit here. Now, if you're looking to move into Chesapeake, you're looking to move into Suffolk, you're going to be paying a lot more of a premium in those areas because the inventory is starting to slack in those areas, but they're starting to increase in those areas. But at the same time, it's increasing. Home prices are increasing substantially in those opportunities as well, too. And with that happening, we're going to see where I'm interested to see where the buyers actually want to redirect their attention to and what they actually want to make a push for. Now, first-time home buyer programs are being significantly pushed in Portsmouth right now in this point in time. And with the publicity that Realtor.com is giving it, I would not be surprised to see a major uptick in that area as well, too, especially with the Rivers Casino actually opening in that area. Some people may find that as a hindrance. A lot more other people may find that as an opportunity to purchase homes for increase in equity value. You have to do your own research a little bit more into that because there's a lot of other reports out there that gives a lot more details on how casinos impact market price equity for homes and how they can be beneficial to homes as well too. So you have to kind of understand that from each side of the coin if you're going to take that opportunity there. Now, days on market are substantially staying about the same. Well, we've seen about a 2% 2-day increase overall, which is not really that major of a pain point. It just means that to me, if you're still working with an agent that you know, like, and trust, if they are able to market your home reasonably and identify the right price point for your listing, everything should work smoothly and things should go to the point where you don't really see the effect of that 2-day increase in the marketplace. So I'm interested. What do you really think is going on in Hampton Roads? And based on this report, what is the areas that you're actually focusing on if you're looking to buy? And if you're looking to sell, what is some of the things, like some key takeaways that you saw in this report that is making you feel like maybe it's the time to sell, or it may be an opportunity to just wait and see how this thing plays out in 2023? I'm interested to know how you feel about this overall, and I hope that I broke this down for you and gave you a great detail in the Hampton Roads market snapshot. If you found value in this content, definitely hit that like button. Don't forget to ring that notification bell, and go ahead and subscribe to the channel too as I continue to bring you more educational content like this about your Hampton Roads real estate market. I'll talk to you soon.